If I can kindly ask everyone to turn on their videos. Thank you very much for your patience. It appears we've fixed our technical glitches in the world of virtual meetings.
Which will conclude the two-day FinTech events of the IMF's New Economy Forum. So I am Yan Liu. I'm Deputy General Counsel at the IMF's Legal Department. For the past several years, the IMF has been monitoring the developments on correspondent banking relationship pressures and its impact on cross-border payments. The Pacific region has been especially affected by such pressures. The region experienced the largest decline in the number of correspondent banking relationships in recent years. Both risks and profitability concerns have contributed to correspondent banks recently closing their operations in several Pacific Island countries. Remittances are one of the key cross-border payments that form a huge part of the economy in some of the Pacific Island countries. IMF data shows that remittances account for about 10 to 40% of GDP. However, the cost for sending remittances in the region remain one of the highest. The confluence of these circumstances has fueled innovation and new ways of thinking, which is what we will be discussing today with our distinguished panelists. In the interest of time,
this meeting is being recorded.
Introduce them, but their bios, which you will find at the website for this event, speak volumes of their extensive experiences, deep expertise, and great interest in these issues. So from the international sector, we have Ashish Kumar from the Financial Action Task Force, Erin Lubovich from the Asia Pacific Group on Money Laundering, and Robin Newnham from the Alliance of Financial Inclusion. We're also joined by Ms. Fono from the Samoa Bureau of Statistics and Richard Ponting from the Australian Transaction Reports and Analysis Center. This very distinguished panelists will be bringing their unique perspectives on three key innovations that are aimed at supporting cross-border payments and remittances in the Pacific region. First, several country authorities are assessing the risks of specific payment corridors in the region and designing incentives for banks to facilitate low-risk individual transactions through these so-called safe corridors. Do these risk assessments have an influence on banks' behavior? And if not, what more is required? Second, the Pacific Island governors, with support from Australian and New Zealand authorities, are committed to developing a regional Know Your Customer utility. This utility is expected to improve regional compliance with customer due diligence and anti-money laundering obligations, to reduce remittance costs, and to support the provision of correspondent banking services. But how can banks and remittance service providers be encouraged to fully maximize the use of this KYC utility? Finally, country authorities are pursuing digital ID initiatives to foster greater financial inclusion. Digital IDs can improve efficiencies in authentication of customer identities and reduce the threat of fraud. However, setting it up is not without challenges, especially in the Pacific region with resource and infrastructure constraints. So, what key considerations should country authorities take into account in setting up a digital ID system? So, these are but a few of the questions that we hope to address during this session. Let me now give the floor to my colleague, Francisca Fernando, who has been deeply involved in this area of work at IMF, to kick off and moderate the discussion. Thank you.
Many thanks, Yan, and good evening to everyone from Washington, D.C. Thank you very much for joining us for this panel discussion on innovative solutions to facilitate cross-border payments in the Pacific. I would like to acknowledge everyone who has joined us in the WebEx meeting, but also those who may be listening to us on the live stream, both on IMF Live and IMF Connect. I do apologize, we're getting some messages that the video link might not be so clear, and we are working to get that addressed as soon as possible. But in the interest of time, we hope that you can at least hear us as we get started on this very exciting panel discussion. Yan has already raised a number of the issues that we would like to cover in the context of this discussion today. And I would really encourage those participants who have joined us through WebEx to share their comments and questions with us as well. We want to make this an engaging and interactive session, and we very much hope that we will be able to take about 20 minutes at the end of this panel discussion to talk through some of those questions. So to get started, to anchor our discussion, I think we first want to have a bit of an understanding of why we find ourselves in this situation. You know, why are banks withdrawing from the Pacific region? What is having an impact on cross-border payments in the Pacific? So I would like to invite Erin from the Asia Pacific Group on Money Laundering. Erin, if you can kindly get us started off by telling us what the APG sees as the main risks in the region. And in short, Erin, why are banks withdrawing from the Pacific region? Thank you.
Thank you, Francesca. Before I begin, I just wanted to acknowledge the traditional custodian of the land from which I am speaking to today, and past and present. Now, in terms of the $64 question, as we used to say, why are banks receding from the Pacific? The answer is complicated. It is a mix of commercial factors and also AML-CFT-driven decision making. And I'll briefly go through some of those elements. On the AML-CFT-driven decision making, obviously, there's a need to ensure that banks and other providers really understand the risk in the region and the risk in the country. And I know Richard's going to speak to that. But there's also the risks that these providers see relating to the particular AML-CFT regimes in the Pacific. So this is the risk that they see emanating from a lack of effective implementation of the international standards, or most importantly, a lack of risk understanding. So there is this concept that a risk assessment is the beginning and the end of the process. But when we speak to banks and other providers, what they're asking is, we want to see that a jurisdiction actually understands its risk, and more importantly, has the mechanisms in place to respond if its risk changes. The final thing that I wanted to talk about were the commercial factors. So there is a cost of compliance for providers relative to the volume of transactions, and that cost of compliance obviously is driven by AML-CFT related factors as well, the regimes that they need to have in place. And then there are simple commercial decisions. So what we hear quite often from providers is that there is a commercial decision-making process that has caused them to pull out of the Pacific. And what we are working on and struggling with in the APG and the FATF is trying to figure out what's motivating that commercial decision, whether there's any tools that we have to influence those decisions.
Thanks very much, Erin. That is exactly what we see in the region as well, which is really this confluence between risk and profitability. So just pinning down on that point in relation to risks, I think maybe we can start with the first topic that we wanted to discuss, which is safe payment corridors. Now, as Jan has already explained, safe payment corridors effectively are money laundering and terrorist financing risk assessments that are carried out with respect to a specific remittance corridor. And the reason for carrying this out is basically to allow authorities to designate what they might consider are low risk remittance corridors or transaction categories. Now, work in this area has been ongoing for some time, and actually in 2017, we had Austrac that carried out one of the first such risk assessments with respect to the remittance corridor between Australia and the Pacific Island countries. New Zealand just published a risk assessment themselves earlier this year. And we also have the G20 agenda on cross-border payments that made this a key objective. And here, fund staff have been supporting authorities' efforts with regard to developing a methodology for such risk assessments. So I would now like to invite Richard from the Australian Financial Intelligence Unit, Austrac. Richard, could you give us a little bit of an overview of what was done in 2017 and what were some of the key findings?
Thank you very much and welcome everyone. We're still in lockdown here in Melbourne, and apparently we've outdone everyone else in the world, longer than Buenos Aires, so we're still going. So the risk assessment was quite a challenge for Austrac. We have a dedicated risk assessments team that focus on products and services and national risk assessments, but the idea of doing a corridor was quite completely new. So the project was commissioned by the Department of Foreign Affairs and Trade, and it was clear that it was that the purpose was because it's a strategic priority of the Australian government, and also because of the increased problems of debanking. One of the things that was thought to be an advantage was the nature of the data that Austrac collects in particular. We collect a range of transaction reports, being a combined financial intelligence unit and AML-CTF regulator. So it was really to try and leverage off that sort of information. And in particular, we collect cross-border information. Every time a transaction goes from one in and out of Australia, it's reported to Austrac irrespective of the value. So we went in with the purpose of trying to assist the banks and implement their risk-based approach and identify opportunities for them to do business in the Pacific, as well as assist the money service providers, particularly those that were to help them better understand their risk. Our experience was trying to develop a methodology because it was very different to what we'd had previously done, and we also had time limitations. So the focus was on purely from Australia to those particular destinations, and so the issue was around a methodology that was built around threats, vulnerabilities, and the consequences of those sorts of things. So, we used to collate a lot of Austrac data. We relied on engagement with our partner agencies and our intelligence holdings. We surveyed remittance providers, and we engaged with key stakeholders. So it was a fairly comprehensive process. But we know in retrospect we probably could have done a lot better. But what we found was that the corridors from Australia to the Pacific Islands were a lower risk. The largest proportion of remittance was for family support, with an average transaction of around $400 Australian. There was a very low level of commercial transactions, and Australia is a source of seasonal labour and for workers from the region sending money home. So that added to the risk, and also the use of cash was fairly low. So we published this risk assessment and indicating that we assess them as being low risk corridors.
Thanks, Richard. So I guess the main question that I have for you is, did it actually influence banks' behavior? Because I think that's what we want to know. And first, that's that. And then also, if what else could be done in future risk assessments? And in particular, what do you think, from your lessons learned, and now that you've had a few years to reflect on that risk assessment and seen the impact or not that it's had, what do you think are sort of the regulatory and supervisory measures that you would follow up with such a risk assessment?
Thank you. Yes, it was a case of build it and they will come, but that didn't happen. So it actually had no significant influence whatsoever. And that says a lot about the way you approach these risk assessments. You need to build in incentives such as a regulatory safe harbour and things like that for reporting for our banking sector. The purpose of the risk assessment needs to be clearly defined. It's got to be objective, and you have to really have a significant overarching engagement strategy, that it's a collaborative and cooperative process. And that's the thing. We would probably do a holistic risk assessment now. We would look at the corridors and the countries. We would broaden we've matured and expanded our methodology significantly. So we would focus on lots of other issues, such as the quality of governance and national security issues, not just terrorism and financing. We would expand the level of information that we would collect. And so that what you try to compact into 6 months is probably really a 12-month job. And we would engage the Pacific Island nations in that process as well. So it's got to be a holistic approach. It's got to be inclusive. It's got to be collaborative and cooperative. And you've got to bring all the stakeholders along with you as part of that process. So, it was, it was fairly narrow what we were doing, and we had a very limited time frame, and there is a massive amounts of data that can be used. But we probably have learnt considerably because of our constant work we're doing in risk assessments. We're doing a finalising risk assessment of the remittance sector. We've just published some risk assessments of the banking sector, and it shows just how much we've matured and expanded. So, so the key lesson is, go in with a proper engagement plan, be inclusive, have a strategy, and things like simplified due diligence, which is what you would take from this. You will probably need to have an incentive such as a regulatory safe harbour. So, I think that, that's really the important thing, is that the level of engagement with the stakeholders and getting buy-in at all levels across the process and across the region.
Thank you very much, Richard. I completely take your point on that. I think what's key is collaboration and sharing of data, and this need to have a holistic risk assessment, because we're talking about a corridor that involves multiple different parties. I would now love to invite Ashish from the Financial Action Task Force, which is the International AML/CFT Standard Setter. Ashish, from the FATF's perspective, what can be done to improve risk assessments, and are they actually in line with the FATF standard? Like, can they really be used as a basis to implement simplified CDD, customer due diligence measures? Ashish, over to you, please.
Thanks, Francisca. And first of all, let me thank you for putting together this whole program, which I think is very timely, very innovative, and very cost-effective as well. Because I think the only sacrifice, at least for me, in this event is, probably lack of sleep or loss of some sleep, at midnight. But I think the concept is amazing in terms of creating awareness about these new developments which are happening across the world. And in that sense, I think this corridor risk assessment can certainly be a useful tool for effective implementation of risk-based approach. I think risk-based approach is a word which has been sort of in the dictionary for almost like 12 years in FATF, and even beyond that, because earlier it was optional, now it is mandatory. But still, we find that our evaluations indicate that there's still some work to be done in this space, and this is where I think these kind of risk assessments can certainly build the awareness and build understanding of risk. And this is the point which Erin made earlier in her intervention, that, when we talk about financial institutions from the region and, their misgivings about establishing business relationships or correspondent banking relationships, I think this comes on top of the issues for them, that, they still have concerns about, the extent to which financial institutions or even governments from many of these regions really understand their risk. So any product, any tool which can help build that understanding and promote greater awareness of the issue is certainly welcome. So to that extent, I think there's a fundamental benefit coming out of this initiative, which I think is very prominent. I think one of the basic premise of risk-based approach is that when you have higher risk, financial institutions should be employing or deploying enhanced measures, and when you have lower risk, simplified due diligence measures should be allowed. And if you have a risk assessment or corridor risk assessment leading to those conclusions, then obviously financial institutions and government should have flexibility to set out appropriate risk mitigation measures which are in line with risk-based approach. So that is something which is allowed within FATF standards, at least in terms of the approach which this whole concept puts forward. What we can do to make this risk assessment better, I think for my perspective, there are three issues involved here, which are key to make these risk assessments as comprehensive and as understandable to different stakeholders as possible. And the first is the data quality, because for any kind of corridor risk assessment, we do need quantitative and qualitative information on a number of parameters. And Richard touched upon making it more holistic. He also talked about making it as comprehensive as possible. And this is where I think the real struggle comes, because even for our mutual evaluations, we find that sometimes countries do struggle to make data available. And for any kind of risk assessments to be comprehensive, we need information and data, for example, on threat environment in the region or in the countries which are involved here. Profile of remittance flows, the nature of transactions, the general market trends, what kind of supervisory practices we are talking about in those corridors. So all this information should feed into any risk assessment to be comprehensive, and that is something which countries and private sector should keep in mind when they go down that road. I think the second element for me, which is crucial here, and Richard talked about it briefly, is about an open dialogue among all stakeholders. And we are talking about not just within the national context, but also between regulators of both sending and receiving countries. We're also talking about engagement and open dialogue between banks from the region, and of course remittance firms, which are one of the key stakeholders here. So unless we have that kind of engagement and open dialogue between different sectors with different stakeholders, I think the uptake will be a challenge. And I think this is an experience which Richard shared earlier in his intervention as well. And this is the same thing we hear from many of the financial institutions, that this should not be simply an exercise driven by authorities, but it should be also much more inclusive and much more open, in the sense that everybody should have a stake and everybody should have a role to play in sharing information and sharing experiences. And I think this is where role of information sharing and public-private partnerships comes into play. And one of the key elements, in fact, to promote these initiatives is really a sense of ownership and shared interests among different parts of the government, whether it is financial intelligence units or competent authorities, law enforcement, or supervisors, as well as the private sector. So this element of trust and confidence is something which is extremely crucial to make these assessments not just an academic exercise, but also more practical in a sense for all stakeholders. And I think the third and final element, which is crucial here, is a sense of confidence among public and private sector about the conclusions of risk assessment, which again is linked to the kind of input which has gone into making these assessments, in a comprehensive manner. And I think this is where the risk appetite of financial institutions and risk tolerance of supervisors will also come into play, because the extent to which these risk assessments can shape sort of, policy interventions or policy directions, will sort of, give clear direction to the private sector in terms of getting a better understanding of what their obligation should be in case of, some transactions or some corridors are identified as low risk. So I think these are some of the critical factors which are crucial here to make these risk assessments, as useful as possible for different stakeholders. And finally, we also need to be mindful of the fact that these risk assessments are not an end in itself. They are just a tool. They are a good tool to help governments and the private sector. But at the end of the day, you should sort of make use of these assessments to make your own sort of decisions, whether you are the government or the financial institutions, as to what you can do with the outcomes or with the conclusions. And if you have better understanding of the risk, you are certain that some transactions or some flows are definitely of low risk or medium risk, then I see no reason why you can't have simplified due diligence measures deployed on those circumstances, because this is the real purpose of risk-based approach, and something which we all find deficient in many respects in many evaluations, that countries are focused on high risk, but correspondingly the focus on low risk or medium risk is not much there. So this sort of creates undesirable asymmetry in this whole scheme of things. So probably bringing the focus back on low risk and simplified due diligence could help countries promote greater flows in those regions. So I'll stop here, Francisca, but happy to answer any questions or any clarifications. Thanks.
No, thanks, Ashish. And your points are well taken, and I think to an extent they also mirror what we heard from Richard in terms of Austrac's experience and what they would do different. But just very quickly, what about safe harbor? Richard mentioned that, and he said, what banks are asking for is basically safe harbor. And by that, what I mean is immunity from some sort of enforcement action. And you mentioned risk tolerance. So just very quickly, the question to you is safe harbor in line with the FATF and the international MLCFT standard? Is that something that authorities can consider offering to banks that choose to sort of, engage with these remittance corridors on the basis that they adopt and build on the risk assessments? So just very quickly on that point, if you could follow up.
I think in some countries we already have flexibility given to financial institutions to use safe harbor procedures. For example, in the process of identification or verification of customers which are identified as low risk or medium risk, and some of the verification procedures in those circumstances could be less stringent than those applicable for the standard or higher risk scenarios. So of course here low risk doesn't mean no risk. So in that respect, there will still be some obligations for individual customers, maybe just to identify and verify some basic elements like your name, your residence address, or your date of birth. But it's still, countries are going down, at least some countries are going down on that road to make it much easier for financial institutions to sort of deploy simplified due diligence measures and give a clear regulatory expectation that in such cases, unless there's a egregious behavior or downright gross negligence or willful misconduct, the supervisors will be more receptive to the idea of these measures put in place. I think beyond safe harbor, we also need to talk about the whole approach of supervisors being proportionate in their supervisory activities, and this is where the concept of risk-based approach again comes into play, because it doesn't mean that it's a zero failure approach, and that understanding has to be there among supervisors, that when we talk about these safe harbors, when we talk about risk-based approach, it doesn't mean that there won't be any mistakes, there won't be any technical failures, but it doesn't mean that financial institutions are complicit in such cases, and they have to be more proportionate, more sort of balance in their approach, and if you have that kind of regulatory culture, I think there might be better uptake and better understanding of how these provisions could be practical in real life. So I think that would make the real difference, not only the legal gateway but also the whole supervisory culture in being proportionate and being balanced in approach. Thanks, Francesca.
No, thanks very much, Ashish. Maybe then just to sort of, finish up our discussion on safe payment corridors, we talked about what risk assessments can do, but I think back to you, Erin. If risk assessments alone are not going to be sufficient, then what does the region need?
I hope you're recording, because here's where the answer is. There is no clear answer to this, and I dearly wish, and our members wish that there was, but I see it coming from two directions. And the first is improving the effectiveness of regimes in the Pacific. And this is the heartbeat of the APG's Technical Assistance and Training program, which is funded by New Zealand, which looks beyond traditional training courses and actually moves into mentoring and making sure that there's a better developed understanding of not just what to do, but why you're doing it. The future of that program will also be looking at growing professional workforces across government and the private sector, so that there's a better base of institutional knowledge. So you don't have, that kind of loss of experience when people move on from their jobs. So I think improving regimes is a key piece of it. But, and it is a big but, we don't yet have evidence that that's going to change banks' behavior. So we do have members in the Pacific that have very high levels of technical compliance, that have high enough levels of effectiveness that they're in our regular follow-up, which puts them on par or ahead of FATF members. And we have not seen that translate into better financial flows. So what's clear to us is that movement in the jurisdictions themselves is not the only solution to this problem. The other side of it has to come from reporting entities and jurisdictions, and it comes back to risk understanding. And I'll caveat this. I say this as a former head of delegation and having worked in the Pacific. There is a lack of understanding of risk across the global network and across the international financial system. And I say this because we are all very good at responding to high risk and very, very bad at responding to low risk. And there are a couple reasons for this. Is that there's often, when we say a risk-based approach, people define risk differently. What we're talking about is risk of AML-CFT, but what providers here is also my reputational risk if something goes wrong. The second part is that they're looking more towards risk elimination than risk mitigation, which is not what the standards require. So I think there definitely needs to be an approach on the provider side, the financial institution side, that holds them to a risk-based approach, not a risk elimination approach. And then finally, I think that there's room for a risk-based approach in the standards themselves, so that, whether certain standards should apply across the board or whether there is room for that. There is work on unintended consequences that's underway on that, so I know that's a very live discussion. But for me in particular, and for the APG, we see it as a solution that does not just arise from the jurisdiction, but has to be matched by action on the financial institution side.
Thanks very much, Erin. And I do take your point. The risk-based approach means both managing your high risks and your low risks. And I think there is a general aversion to sort of working on low risk, but that really is the basis and the foundation of what a risk-based approach is. So now I'd actually like to, we've heard about risk and how we try to manage it, but what about technological solutions? And now I'd like to actually turn this part of the discussion to that on, what are the emerging technological initiatives that can actually help in terms of improving AML-CFT compliance? And for that, maybe we'll first start with digital ID systems. Now, digital ID is being talked about on several fronts, both in terms of how it can facilitate traditional payments, but also emerging sort of digital payment structures. So it has broad applications, and countries are just starting to adapt them. And so the bigger question, though, is we're still very new on digital ID. So what does it take to make these systems robust or secure or even interoperable? For that, it is my pleasure to invite the Fono from the Samoa Bureau of Statistics, because Fono, I understand that Samoa is one of the first countries in the Pacific that is really trying to get digital ID kicked off the ground. Fono, could you talk to us a little bit more about what was the motivation behind digital ID for Samoa, and what are some of the key considerations you're thinking about as you're setting up this digital ID system?
you, Francisca. Talofa and warm greetings to everyone in this forum. It is a great pleasure to share our experience in setting up our digital ID system. I would like to address first the question of what was the motivation behind the project. For information, the national ID was endorsed by the government of Samoa in 2017, but it only came into reality in July 2018 when we received funding support from the World Bank to support this project until 2023. So the key motivation behind the National ID project was to uplift the quality and efficiency of delivering of government services to the people of Samoa at lower costs. Hence, e-government was visualized as the most viable solution, especially at this digital era, to deliver a more efficient and effective public service. The idea of e-government meant a lot of services would be delivered on digital platforms like passport applications, voting registrations, welfare payments, and many others. Hence, avoiding long hours of waiting for our citizens to be served by officers, less paperwork, and cost saving for the government if we go paperless. So in order to facilitate the e-government platforms, the concept of a national ID came up for the government services to provide multiple services more efficiently to the same person. So in addition, the national ID was similarly seen as also very beneficial to the private sector and the business community and all persons in the communities, and especially for online trading and sending and receiving remittances online. We also noted that the national ID projects open up opportunities for all citizens, especially the disabled and most vulnerable persons, to access all relevant government services and also in the private if they wish to, instead of relying only on passports, driver's license, or birth certificates, which many do not have. So in setting up the National ID project from 2018 to date, Samoa has already moved forward in developing the most relevant legislative framework. And to date, the draft bill is in place and we are in preparation for our national consultations of the draft bill around November to December of this year. We have also moved ahead with the technical and functional design of the system, and to date, we are finalizing the documents for tendering the ID system to interested vendors, and we are moving ahead with many other related activities of the project. Now, in response to the question of setting up our ID, our digital ID system, Samoa is putting in place two options for having an ID. First, we will have the physical ID card and using QR code for verification and authentication. And secondly, we will also have the mobile digital ID in place. The physical ID card will be issued free to all for the first time, and we believe that it will mostly benefit the elderly, the less income families, and citizens living in remote areas where electricity and connectivity is poor. On the other hand, the mobile digital ID will, of course, be more popular for the younger generation and mobile phone owners, especially for online trading, payments of fees, and including receiving and sending money within and outside of Samoa. So I must say that we have a very, I would like to acknowledge a very enthusiastic steering committee comprising of about 10 government CEOs, including the governor of the Central Bank of Samoa. And we also have a representative from the private sector in this committee. And we are all looking forward to see our national ID for the first time, hopefully by June 2023, both the physical and the mobile and digital ID. Thank you.
Thank you very much, Fono. And we wish the Samoan government every success in setting up a digital ID scheme. We think and we agree that it will be very beneficial, and we're certainly going to be following on your development of it. I would now like to invite our last panelist, but certainly not least, Robin Newham from the Alliance for Financial Inclusion. Robin, the Alliance for Financial Inclusion actually very recently published a very comprehensive policy model on digital ID and eKYC that kind of breaks down in very extensive detail what are the key policy, legal, regulatory, and technology requirements that countries really need to be thinking about as they set up these digital ID schemes. So maybe from your perspective and the work on this policy model, could you give us an overview of what it is that countries need to be thinking about as they're setting up these digital ID schemes?
Thank you very much, Francesca, to you and to the IMF for the invitation to be on this panel today. The Pacific jurisdictions are a really vital and vibrant part of the Alliance for Financial Inclusion network. So we're really pleased to have the opportunity to share a few thoughts on this topic in this session. So if I can try to build on the really excellent example that we've just heard about from Samoa, and I'd like to start just before I get into the policy model by taking just a little step back and saying that when we're talking about digital ID systems, we're of course not talking only about a matter of technical standards, but also a potential tool for economic and social empowerment. I think it's very important to understand that. We know globally from the World Bank's data that there's more than 1 billion adults lacking any form of legal ID. We also know that there's several hundreds of millions excluded from formal financial services because they don't have the documents required for ID and verification. And this is despite the risk-based approach having been around for some time now, as we've heard. We also know that women are disproportionately excluded despite being a lower financial crime risk on average. And so too are disadvantaged groups such as persons with disabilities or refugees and other forcibly displaced persons. So we do think in the Alliance that there is a lot of potential in digital ID systems to address some of these barriers to access, utilizing the technology for leapfrogging. And I think we have seen during this last 18 months of the pandemic the value of investing in this critical digital infrastructure, which I think we can regard as essential public goods now. We've seen how digital IDs have helped to maintain e-commerce activity in the context of lockdowns, also played a very vital role in the delivery of emergency social welfare transfers, including into informal worker populations, into rural areas that would be very difficult to reach otherwise. And in the cross-border context as well, digital IDs have been a key reason why remittance volumes have held up actually remarkably well, despite early predictions that they would decline heavily with the economic effects of the pandemic. So we've seen a big switch in the channels used from cash-based to digital, especially jurisdictions with mobile money wallets that enable that. But we haven't seen too much of a decline in the volumes sent. And of course, that's very critical for regions such as the Pacific, where remittances do make up such a high proportion of the GDP. And so recognizing the importance of digital ID in this period, that was really the reason that the members of the Alliance for Financial Inclusion, that's central banks and financial regulators from around 90 countries across the Global South, decided to develop and adopt a policy model for digital identity and electronic KYC. And the policy model is essentially a form of guidance for the network. It goes through a thorough process of review and finally adoption at the annual general meeting, and also a public consultation stage as well. And we really appreciated inputs we had from the IMF, from FATF, and from other stakeholders as well. And the policy model is really intended to be complementary to other guidance that exists, especially from the ID4D principles out of the World Bank, also the FATF's own guidance document on digital ID that came out in very timely fashion early in 2020, just as the pandemic was breaking. So let me just say a little bit about the key content that's contained within the policy model, which is on our website, as Francesca said, for those who'd like to find out more. So the policy model is divided into three key pillars, and they cover respectively, firstly, policy and regulatory frameworks for implementing digital ID and eKYC. So that includes overarching laws such as data protection and governance, as well as financial inclusion and gender considerations in this pillar as well. The second pillar focuses on policy considerations for designing the platform itself and for building the ID system and the technological infrastructure around it. And then the third pillar is looking at policy considerations for implementing key processes and use cases for leveraging the digital ID for eKYC use cases. And so this section has a framework, some guiding principles on key elements to take into account in eKYC regulation, including interoperability, last mile infrastructure, grievance resolution and such like as well. So all of these different areas are detailed. But a few considerations I just would like to highlight as being especially important. So firstly, on technical standards, of course, it's easy to say go for a national digital ID, but we need to make sure that the digital ID systems meet satisfactory assurance frameworks and standards. And this is highlighted in FATF's guidance as well, that when these assurance standards are met, then remote verification can be the same risk or even a lower risk than face-to-face verification. So that's very important confirmation there. Secondly, in terms of policy considerations, sorry, I just want to add a point on use of biometrics. And of course, many digital IDs are utilizing biometric features, whether that is fingerprints, iris scans, other forms of facial recognition. So the policy model really highlights that the use of biometrics should be context specific, proportionate, and that collection and use should be kept to a minimum necessary and governed by clear policies on storage and usage. And of course, that's very important to maintain a trust in the system on how the data that's been captured used. Another key principle running throughout the policy model is that of user centricity. So building that into the design of digital ID systems so that data control is in the hands of the user. And for the sustainability of digital ID systems, we think it's very important that they are seen as tools of empowerment by the user, and of course not as tools of control or surveillance, which can be the risk depending on the design. And finally, safeguards are very important indeed to build in, and that can include considerations such as data protection and privacy, but also cybersecurity. And that's very important to bear in mind, given that many of the jurisdictions in the Pacific will not have very advanced cybersecurity frameworks at this stage. So it's really important that through developing digital IDs, we're not establishing honeypots of data that could be actually vulnerable for exploitation by bad actors, despite the good intention behind these projects. And I just want to finish up my answer by bringing it back to cross-border payments. And of course, we can see that there is a link here in that digital IDs can clearly help reduce some of the friction, some of the duplication of KYC processes that exist in the correspondent banking system that underpins most cross-border payments today. So there is a lot of potential there, but I think we also need a caveat here that digital IDs by themselves won't be the silver bullet to the de-risking problem in the Pacific. There's many other elements to that, including risk appetite, stakeholder engagement. So we can't just flick a switch on this technological solution and have it solve everything, but we do believe that it can be a part of the puzzle when anchored in a more holistic policy framework.
Thanks so much, Robin. From everything you've said, I think there needs to be a lot of thinking that needs to go in behind setting up digital ID systems. And you've actually preceded me in a question that I did want to ask, and maybe I'll quickly check in with Fono, which is digital ID sounds great and probably is the way of the world and the way in which we're moving forward. But what are the challenges and what are the risks of digital ID? And I think, Robin, you already mentioned about the cyber risks, the fear of the honeypot, but maybe Fono, from your side, as you're thinking, as the Samoan government is thinking of setting it up, what are the risks that you're concerned with? Maybe if you can talk to it very quickly. Thank you.
I think just adding on to what has been said, privacy and security violations is one of the challenges that we are expecting. So we need a very strong legislation with Privacy Act to protect the citizens' personal data. And we also need robust cybersecurity systems within the ID system itself to minimize hacks and cyber attacks to the system. We also need to be aware of the connectivity in the country, because we need to have good connectivity and ICT infrastructure, because the system is a very complex and requires a lot of technical aspects. So our countries need to be aware of that. It's not a simple thing to set up. So we are talking about a data storage center, cloud services, the technicians who should be managing and monitoring the system. And even during the enrollments, we really need good electricity and infrastructure for us to be able to enroll people in the isolated and remote areas. I think I can mention we need to have a very strong civil registration system as well. Right now, we only have 70% registration rate the whole of Samoa. So we still have another 30% that we need to work out how to make sure that we include them in the system before we actually go out and conduct the mass registration for the ID. So there's a lot of preparations on the ground. I think at the end of the project, we all know that the funders will leave the country. So we are hoping that the government, we need the government to commit to sustainability of the system so that we are able to maintain the cost and everything that is related to the system to make sure that it keeps running and not finished at the end of the project. And maybe the last one was mentioned by all the others, that's trust and confidence by the public. So that's why we need a lot of advocacy and media awareness workshops, a lot of consultations, which we are planning to go out in the next 2 months to make sure that, the project is smoothly accepted by the public. Because if they accept and see the benefit to them and to the government, then I think we will have a very successful project in the future. So thank you very much.
Thank you very much. Robin, is there anything more in terms of risks that maybe you would like to add? I think we've covered a few, but maybe if you had some, if there was anything more you wish to share.
Yeah, thanks, Francesca. Just a couple of brief points there. I mean, one is clearly in the Pacific, there's a challenge relating to just the geography of those countries, some very, very remote populations. So there's a high cost there to enrolling everyone within those systems, collecting biometric information. If that is going to be incorporated, you may also have multiple languages in one jurisdiction that needs to be considered, or even illustrate population groups as well. So building inclusion into the design of the digital ID so that all of these groups can access it, because of course if you do end up with the situation where you've got 10% of your population still outside of it, that could actually exacerbate their exclusion. And the second point I'd like to make is just in terms of regulatory frameworks. I mean, we've heard there may be areas where laws and regulations need amending to be aligned with the digital ID. We've seen quite interesting innovations coming out of regulatory sandboxes in a number of jurisdictions, where they seem to have been very useful for testing digital ID applications. And then jurisdictions have published their eKYC regulations after having that testing period. And we do think that has potential in the Pacific as well. So AFI is working with our 7 member central banks in the Pacific on a regional regulatory sandbox, which will roll out from 2022. And we hope that this is going to allow more digital ID solution providers to come to the Pacific and test their solutions there, and also deal with some of the economy of scale issues by allowing simultaneous deployment in several of the markets rather than just in one jurisdiction.
Thanks very much, Robin. Conscious of time, but still wanting to cover the last solution we wanted to talk about, I very quickly wanted to touch base on a recent initiative by the South Pacific Central Bank governors to set up a regional Know Your Customer utility. Now, effectively, what this is a centralized database that would hold banks' data and data related to their beneficiaries in a central access point. And this is, one of the first I've heard that's being done on such a big scale at a regional level. So maybe I can invite Richard. I know for the regional KYC utility is being done in coordination, if I understand correctly, with the Reserve Bank of Australia, the Reserve Bank of New Zealand, and also with support from the fund. So Richard, maybe you could just very briefly tell us a little bit about what you know of the regional KYC utility and AUSTRAC's role when it comes to that regional KYC utility and how you might use it. Thank you.
Yeah, thank you. AUSTRAC's role has primarily been in an advisory capacity, particularly at the very beginning of this project, obviously being an AML/CTF regulator that also regulates the remittance sector in Australia. We help them understand the nature and extent of the customer due diligence or KYC obligations. And we also were able to introduce them to the remittance sector in Australia. And we talked about setting sort of levels or standards, if you like, around the nature of KYC across the region as well. So we also sat in their initial meetings with the banks. We were primarily an observer with the Australian banks and international banks. And one of my understanding is that they have now developed a business case for the KYC utility, and the next step is to take that to the next meeting of the Central Bank Governors Forum, which is in November. They have also sort of expressions of interest in terms of potential providers, etc., to help facilitate the business case, because they're trying to understand the costings and the level of usage, etc., and the feasibility of the model is quite critical. There has been some positive feedback from the banks, but because one of the clear benefits of this, and I think this is really important, is that you get a consistency across the region in terms of processes. So, I mean, one of the comments that I've been engaged in separate meetings with banks around the Pacific on other matters, and they're looking for a consistent application of AML/CTF standards and processes. And that is one of the attractive parts of this, so that that they can have confidence in the process. It's transparent, is what they're going to be ensuring, that the banks can see who the underlying customers are, etc. But it brings a consistent standard right across the region, and that makes it all the more attractive. So and that's something that AUSTRAC is really supportive of as well. And that not only does it bring uplift to the remitters in Australia and New Zealand, but it brings in uplift across the region as well. So that's a significant factor. So we continue to support, and we continue to provide advice and guidance to the RBA as they progress this project.
Thanks so much, Richard. And I think we hear you loud and clear. Consistency, that would certainly help in standardizing with the standardized data collection that the regional KYC utility would have. So picking up on that point, maybe to finish off our discussion on these technological developments, maybe I can invite both Ashish and Aaron to share both the FATF and APG's views in terms of the usefulness or even maybe some of the risks of digital ID and regional KYC. Maybe Aaron, we can start with you, if that works.
Yeah, happy to, and I can be quite quick because I have to say I agree fundamentally with everything that Robin and Ms. Fana said about that there's not a silver bullet, and it's important to introduce these systems correctly and reliably. But in terms of the standards, we see 2 or 3 primary value propositions here. The first is that it increases the reliability of the KYC function, and it enables small jurisdictions to be able to not remove the human element from finding suspicion, but to direct that human aspect to the part of the system that needs it the most, and automating the parts of the system that you can. And the other one that I would say, and this goes back to the commercial, to the extent to which it reduces compliance costs and makes the value proposition a better proposition for banks, and also the extent to which these types of solutions have the ability to increase competition, which will have an impact on those commercial decisions.
Thanks very much, Aaron. And Ashish, you have the last word in terms of digital ID and KYC utilities.
Thanks, Francisca. I think our experiences have shown that these KYC utility models have worked in some regions and probably not in some others. So still there's a learning curve which is out there in terms of understanding what might work in different circumstances. And there has been a lot of learning, unlearning, and relearning of of the whole space of KYC utilities. And I think there are some fundamental considerations which are involved here, which sort of might have been missed in some of those models, which were sort of found inoperative in some sense. And these were like considerations of, for example, data privacy and protection, to what extent data pooling and data sharing could be allowed under the existing frameworks, to what extent the cost element were considered while setting up these models, and also alignment of, for example, incentives. Who is setting up these registries? What exactly is the business model out there? Will banks feel comfortable sharing that information or sourcing that information based on the existing framework, which is part of the governance model of these utilities? So I think those considerations are extremely critical when countries decide to set up the model, because ultimately any model which is out there has to be useful for the users, and if it doesn't provide that value proposition for the users, then it will be challenging for any uptake. So I think that understanding is very much there now, as countries are sort of embarking on different structures. In some cases, we are seeing the initiative driven by central banks, while in other cases, like for example in the Nordic region, we have found that 5 banks have got together and set up this kind of data pooling, where it is not only helping in onboarding and improving the customer relationship, but also providing them a much bigger picture of what is happening across different banks, so that banks can take a more holistic view of, for example, suspicious transactions or any unusual transaction patterns. So that is sort of one of the attendant benefits which is coming out of this initiative. On digital ID, very briefly, I think everything has been covered already. There has been good uptake in many countries, and probably the benefit is very, very clear from the pandemic experience, where we have found that countries which are pretty advanced in the learning curve and had necessary infrastructure in place really benefited out of remittance flows in particular. And the data also supports that that the remittance flows did not suffer that much negative consequences, as was the case with cash transactions. To that extent, I think digital payments and digital IDs have really helped many of the countries and financial institutions to tide over the crisis, and probably this is the way to go, not as a silver bullet, as Erin mentioned, but also as one of the tools which can help sort of include even promote financial inclusion objectives in the long run by having different assurance levels of digital ID platforms. So I think to that extent they can definitely help in cross-border payments as well well as in promoting financial inclusion. Thanks.
Thanks, Ashish. We are also very excited about the potential of digital ID. It's something, we're going to continue to follow very closely. As we're now coming to the wrap up of this part of the panel discussion, I just thought maybe I'm going to put it back out to the panelists. We've heard a lot today, and it's been a lot to process, and it's been very, very informative. So thank you for those very thorough and very interesting responses. But as we before we move into the Q&A, maybe a question to you. What is the one thing that you want the audience listening here or even on the live stream, what do you want them to remember in terms of the implementation of these solutions? Maybe I can get Robin, if you can start off by, the one minute liner of what it is you want. What is the main takeaway from this discussion? Robin, with apologies, I think you're on mute. Thanks.
So yes, on digital ID, I think it's clear that it has the potential to solve some of these challenges and to be a tool of financial and economic empowerment. But whether that potential is realized is going to depend on the quality of design and the quality of implementation as well. And I think it's key to realize that we're not just talking about a technological solution, but we need to have a common vision and multiple stakeholders brought on board with that as well. And I think that's key to all the elements of the solution areas to this de-risking challenge in the Pacific, that they're not going to work unless we have the private sector on board, all of the key players around the table, and ultimately that might be the way to start influencing some of the behaviors and hopefully to see a reduction in the debanking that's been going on. Thank you.
Thank you very much, Robin. Fono, maybe I can turn over to you next for your last line.
Yeah, I think the most important thing for me is the collaboration, collaboration between the government, the private sector, and also the key beneficiaries, which are the population at large. I think we should all be able to work together and make sure that we speak the same language. We understand the risk. We all understand the benefits of it. If we all do, then I think it should be all right for everyone. Because without collaboration with all the data users and all those who will be involved in this service, then it would be very difficult to pursue. I think with that, and also we need a very strong legislative framework to support the implementation and the use of digital services so that everyone is protected. Thank you.
Thanks very much, Fono. Maybe Richard next.
I would just endorse those last remarks and say it's about cooperation across the region. Whilst we respect the sovereignty of each of the Pacific Island nations, one of the things that AUSTRAC is doing at the moment is working with the FIUs, the financial intelligence units in the region, to capacity building in terms of knowledge, training, capability, mentoring, building up the FIU toolkit and their technology, but getting them to work together in a partnership so that they have a common share, they share information, they share knowledge, and you get a consistent approach out of that. And that and both Australia and New Zealand are involved in this process, this Pacific Island Partnership, and we're seeing considerable uplift and working together. And I think that's sort of a really significant underlying theme of any of the initiatives, that collaboration and cooperation and working together and having a consistent approach across the region. That's probably my clear takeaway. Thank you.
Thanks, Richard. Ashish?
Thank you, Francisca. I think the danger of coming last is that everything is already being said. So I don't have any significantly innovative solutions or one-liner. But I think based on the discussion today, it's very clear that the ongoing dialogue within the government, between different institutions, not only just the supervisors, but also law enforcement, between FIU, between supervisors on one hand, and also extending that kind of public dialogue with the private sector to have more robust public-private partnership in a real sense rather than just as a structure is really the key. I think for any initiative to be successful, we have to have both sides sitting on the same side of the table rather than sitting across the table, and that's the message which should be out there, that we are in the same boat, sharing same vision and same expectations of any initiative, and that will be the key for success of for those technology platforms. Thank you.
Thanks, Ashish. And actually not quite last, because we actually have Erin. Erin, so the last word to you.
Okay, thank you. So my key takeaway is going to be about the one risk we haven't talked about, which is the risk of doing nothing. And I think that every actor in the global network, that is policymakers, jurisdictions, competent authorities, financial institutions, needs to appreciate the risks that are happening because of the status quo. The de-risking, financial exclusion is bad for social outcomes, and bad social outcomes are very good for the criminal environment. De-risking, financial exclusion drives money underground, which is bad for governments and very, very good for the criminal environment. And I think that bigger risk is something that gets lost in the minutiae of some of these more specific discussions. So I would like to just leave it there. Thanks.
That is actually a very powerful way to leave it. It is the risk of doing nothing, and that's certainly not what we will do here. I believe we have probably about 5 or 10 minutes. I would now turn over to my colleague, Jonathan. Jonathan, is there any questions that have come for us in the chat function that are directed at the panelists? Thank you.
Thanks, Francisca. Indeed, we have some questions, and maybe I can direct them to Richard, particularly on the risk assessment. I think there was a comment from one of our colleagues from the Reserve Bank of New Zealand regarding their own risk assessment and how this has been used also as a tool for emitters to try to understand also the risks in the corridors. And there's also a question, Richard, regarding whether the the corridor risk assessment was, I guess, whether the banks were privy to it. But I think you responded to that as well in terms of whether or not the banks were participating in that process. And I think there's some thinking that you mentioned, Richard, in terms of how to improve the corridor risk assessment. But maybe a question to throw at you, just to add into the mix, I think is there consideration being made to update the risk assessment, and what elements do you think would be necessary to incorporate there that would, again, greater influence the behavior of the banks when dealing with these low-risk corridors? Over to you, Richard.
Thank you. The banks were engaged in the first risk assessment, but I think that the process is around much more a unified sort of process. Austrac is considering doing an updated risk assessment, and the timing of that is to be determined because we have a dedicated risk assessment team. But they have, as a consequence, since that time, built up their methodology. They've just completed a very comprehensive risk assessments of the Australian banks. So as a consequence, the relationships have been expanded and the methodologies expanded as well. So, it's a question of timing and also whether Austrac may attract funding for that type of thing to do that. But certainly the whole approach would be completely different and would be more inclusive. And also we would give ourselves more time. The 6 month window was very tight, and it would look at both the countries involved, and the not only remittance from money service providers, but remittance from banks, and take a much more holistic picture of the process. But it is definitely under consideration in the near future. That's one of the things. It's a dynamic thing. It's not a point in time. It's only a point in time, and the risk picture changes so dramatically. And one of the things that we're looking at with the Pacific Island Intelligence Forum partnership is maybe working a cooperative risk assessment as well, so that each of the countries are involved and participate in the process. And that's been mooted as part of that particular project as well.
Thanks, Richard. I think, again, it highlights the need and the importance that you put in terms of cooperation and really information sharing, that the risks are really dynamic and they change. And sometimes, again, making sure that there's a fulsome exchange of information helps authorities and also financial institutions to be more receptive and be more dynamic in terms of assessing the risks. I'll turn it over now to Erin, just regarding with respect to the regional KYC utility. I think there were some discussions of ensuring that there's a level of consistency in terms of the application of the regional KYC utility. But maybe a question to you is, how do you think that regional KYC utility could address, again, the issue that you, I think, already mentioned, that there's a disparity in terms of the level of technical compliance and effectiveness? And maybe as a follow-up question to that is also how you think what measures would be important to overcome resistance, particularly, let's say, from banks or remittance service providers in signing up with this regional KYC utility when, again, you mentioned the issue of cost and profitability when they have their own, I would say, risk assessment and controls, and where if this regional KYC is going to be put up, does that mean that they would have to abandon their own systems? And how do you overcome that resistance, I guess, from the private sector in order to ensure consistency in the approaches? Thanks, Erin.
Thank you. There's a lot in that, so I'm going to try and cover as much of it as I can. I mean, I think in terms of one of your first questions, which was regarding technical compliance and the disparity among jurisdictions, I mean, I think a digital KYC facility, if done well, has the ability to improve technical compliance in those jurisdictions which are struggling. But something I alluded to before is that you still have the question of effectiveness, which is how well is it working to spot suspicious transactions. And to know your customer. And I think there will always be a human element to that. So the challenge will be not losing that human element, but redirecting it to the places where it's best served. In terms of increasing uptake by the various institutions that are providing services in the region, I mean, I think there's two solutions to that. Well, not solutions because I don't know if they'll work, but there are two approaches. And the first one is what we've talked about, which is some assurance from the banks that using this rather than their own systems will not expose them to their own risks of supervision action, for instance, or non-compliance. But the other is, and we've seen a tremendous amount of headway with larger jurisdictions using the bargaining power they have in the region. So we find what works best, and we're eternally grateful to countries like Australia and New Zealand for assisting to broker some of these solutions. And I think their presence is going to be a really huge part of getting this over the line.
Thanks, Erin, for that. I think, again, as you mentioned, there are no silver bullets on this, but again, the risk of doing nothing is even greater. So I guess a lot of moving parts that need to coincide. And I think I want to turn to a question that I think was posted also in the chat in terms of the urgency of these solutions. And maybe I can turn to Robin and also Pono on this. Again, I think the issue with the Pacific region is, again, the danger that they would have the lack of access in terms of the international financial system. And again, knowing that there are no silver bullets, but I guess I just wanted to get your inputs in terms of how the situation, particularly with some of the banks pulling out of some of the Pacific island countries, how has that impacted, I guess, the urgency in which some of these solutions need to be rolled out? And if you feel that also whether the COVID pandemic has also highlighted to some country authorities the need to speed up some of these innovative solutions, particularly on digital IDs. Over to Robin and Pono, if you have thoughts and views. Thanks.
Thanks for that, Jonathan. Yeah, I think that the question kind of speaks for itself. I definitely agree. It's a problem that needs solving yesterday, and I think we've all been aware of the issue now for quite some years. A lot of solutions have been proposed. Some of them have been implemented, but there's clearly been very, very slow progress in terms of actually reversing or even stemming the trends going on. In terms of the impact of the pandemic, I think it can cut both ways. So we are definitely seeing impetus, added impetus for technological solutions such as digital IDs. So I think we'll see a lot of pace, a lot of political support, maybe more resources supporting investment in digital infrastructure as well, all of which may help. But of course, there's also a risk that the pandemic also adversely affects risk appetite of financial institutions even further, given tighter conditions and higher risks about in general, more uncertainty. So I think that's something we have to be wary of. But I agree with the sense of the question that this is a very urgent issue.
Pono, did you want to add anything on the issue on urgency and how this has affected also the project and how the ID project in Samoa?
I can only say that we are working in collaboration with the central bank, especially in relation to the eKYC project. And we are hoping that there should be an integration of activities so that we don't duplicate what the other is doing. So we are all hoping that we can use the ID that we are developing and link it to the eKYC facility so that we can all enjoy having just one system and not dual systems. So that will save cost and save time for everyone who are involved in this project. Thank you.
Thanks, Robin and Pono. I'll turn it back to, in the interest of time, I'll turn it back to Francisca to, I guess, summarize, I think, the key findings for this event. Thanks, everyone.
Thank you so much, Jonathan, and thank you very much to the panelists. In terms of the summary, I think our panelists have all been so eloquent here today that I don't have much to add, but maybe just very broadly, safe payment corridors do work, but we do need to get the banks on board. I think that was a key takeaway for me, and that there is a need to conduct these in a holistic, comprehensive manner and actually involve all the different parties, the banks, as well as the various countries that are involved in remittance corridors. Authorities should not be afraid of using simplified measures. We talked about that a little bit earlier. The risk-based approach allows for it. And indeed, I think over the last few years, there's been this emphasis on high risks and what needs to be done. But have we gone too far? What about the low risks? What can we do to address those low risks, which are, at the end of the day, perhaps some of these remittance corridors are transaction categories. Digital ID holds great promise, but to work, it needs strong, robust infrastructure, but also strong policy, legal, and regulatory frameworks. The same for regional KYC, but regional KYC is only as beneficial as the information that's in the regional KYC. So we need to make sure that that data is correctly and securely collected. And maybe this is an area where digital ID can actually help support regional KYC utilities. Finally, one other point from my end is none of this really matters if we don't also continue the much needed work to fix the real AML CFT risks. That work needs to continue. There is a need to continue to grow capacity of authorities and so we're here to support. The fund is committed to its mission to support its members on this, as are everyone else on this panel. The final thing on my end is, in all this, let's not forget who we're doing this for. It is the remittance sender and the remittance provider, the ones who need our help and our support. This is the beginning of many of these discussions. It's not the end. Thank you so much again to our wonderful, wonderful panelists. Again, very appreciative of the time differences, both in Paris, in Malaysia, in Samoa, in New Zealand, in Australia. Thank you so much for taking the time to come on and have this interesting discussion and exchange of views with us. And thank you very much to everyone who joined on the WebEx to participate and everyone who's been listening to us on the live stream. We hope that this has left you with some food for thought. So on my end, it's thank you to everyone and goodbye.
Thank you.
Thank you. All the best.